So in this presentation, we are going to look at why the Indian rupee keeps falling against the US dollar, which is the standard currency to trade in international market. A 76-year-old decline journey. So from rupees 1 is equal to dollar 1 in 1947 to rupees 85 against a dollar in 2024. This journey has been truly remarkable in its own sense, where we are able to see rupee reaching to newer heights as compared to dollar. Of course, rupee is growing weaker and weaker. So in 1947, 1 rupee equal to dollar 1. By the end of 2000s, it equal to rupees 43 as against a dollar, and now in 2024, 85 rupees equal to $1. And chances are there pretty much that it might touch 100 rupees per dollar soon. This steady decline not only impacts fuel prices, imports from other countries, and everyday living costs, but also the common man's pocket, the middle class income. Another problem we are facing is the trade deficit problem. Uh, a dollar 37 billion gap exists between our exports and our imports. Of course, our exports are way lesser than our imports. So in November 2024, imports stood at 57.85 billion dollars, our total imports, while our total exports stood at 20.11 billion dollars, which is 27% lower than the last year. So this $37 billion trade deficit increases the demand for the dollar, weakening the rupee even further. Another phenomena we have observed is that in October 2024, more than rupees 1 lakh crore were pulled out from the Indian market by foreign portfolio investors and foreign institutional investors. They withdrew large investment seeking better returns in the markets like China and Vietnam. This was because of the rising US Fed rates, interest rates, which are now standing at 5.5%, and it attracts global capital to US bonds, reducing further the dollar inflow to India. Another phenomena we have observed is related to the outbound tourism and spending. So, what is exactly outbound tourism? More and more Indians are now traveling abroad. When they travel abroad, they convert our rupee into dollar and they spend dollars in the American market. So, there is more and more circulation of Indian rupees in the international market. So Indians approximately spend $18 billion on outbound tourism in 2024. More Indians are traveling abroad, exchanging rupees for the dollars. This higher demand for dollars weakens the rupee even further, and it impacts import heavy sectors like fuel and tech. And these are the main drivers of the dollar demand in the international market. China is much more greater than India in terms of trade surplus. China stands at $97 billion trade surplus. Where does the India stands? $37 billion deficit. That means our imports are lesser than our exports. China's strong export driven economy ensures their currency stability. So, India's reliance on imports and a weak manufacturing base intensifies the challenges in front of the Indian rupee. What's the road ahead for India and Indian economy and the Indian rupee? What's the solution, and can India reverse its trend? Apparently, we have to boost our exports through Make in India initiatives to reduce this dependency on our imports. We have to stabilize foreign capital flows by attracting more and more foreign direct investments and reducing foreign institutional investments volatility. We have to encourage our domestic tourism to reduce dollar outflows. What do you think, guys? Can India really turn its trade and the INR story around? Or is it that rupees 100 equal to dollar is inevitable in the near future? Do drop your thoughts in the comment section, share your views. Thank you so much.